Economists say a slight uptick in consumer price inflation could support the case for interest rates to be cut. The Reserve Bank due to announce its latest decision at 3 o'clock this afternoon after the last three-day meeting of the Monetary Policy Committee. It's the last meeting of the year. CPI rose to 3.6% in October, essentially showing it remains contained. Our business anchor Tumisang Ndlovu joins us now to go through expectations this time around. Tumisang, good afternoon to you. So much to look at here. We have a lower inflation target for the first time. What are the latest projections?
Absolutely. Good afternoon, Stephen. So the projections at this point, most of the economists that were polled by the likes of Bloomberg are factoring in a cut, and at this time around a 25 basis point cut. That would then, if we get that early Christmas present from the Reserve Bank governor later this afternoon, it would move the repo rate from 7% to 6.75%. Of course, most of the South African consumers would welcome that. You also mentioned the reasoning behind why these economists would be predicting that there would be further monetary policy easing at this point of the year. Of course, the inflation targeting that was reached as a consensus and announced in the medium-term budget policy statement at 3%. Now, inflation has ticked up slightly to about 3.6%. It's still within the range. However, it tests the vulnerability of what then happens if CPI in South Africa ticks up even further. Would then mean that the Monetary Policy Committee rethinks with that, of course, lever of a 1% between the 3% target range to maybe change direction come 2026. We are not there, though, yet, but at this point, analysts are saying that the market is already pricing in an 84 to 88% chance of an interest rate cut at 25 basis points.
There's so much in all of this, because on the one side, you've got the Reserve Bank that needs to sort of show that it will be kind of humane, if that's the right word, in the new inflation target. So maybe a cut now wins there, sort of almost politically, not that politics is supposed to be a part of it. On the other side, you've got inflation expectations. You've got to show people that actually you are going to stick to what you said you would do. So it's quite a fine argument in some ways.
Absolutely fine, but what it also does, it then gives an interest in terms of sentiment, where both politics and economics are concerned. We know that business confidence has been improving as well as consumer confidence. What the medium-term budget policy statement and the finance minister has done just last week in that agreement of inflation targeting is giving the market reassurance that the South African Reserve Bank is on board with what National Treasury is thinking. What does that then say to South African consumers? We are singing from the same hymn sheet, and what does it do for buying power? It gives a little bit of confidence, and the timing is quite interesting because we are going into what is known as silly season. Most of us spend a little more than what we have, so an interest rate cut would bode well for that particular sentiment. On the politics side of things, we are, of course, hosting the G20 summit. It says to the rest of the globe that South Africa is moving in a direction where everyone is actually quite disciplined and feeding into the fiscal policy framework and path that both National Treasury and the Reserve Bank spoke for. And S&P Global, as many of us would remember just last week.
Tumisang Ndlovu, thank you very much indeed.